So Beck and Chris, we're talking this afternoon, sort of broadly social services, I guess we'll call it, the healthcare, not-for-profit sector, pharma, your recent experiences in those industries, and the state of the market and how you see things now and playing out over the next, 12 to 24 months. Chris, you've got some not-for-profit in particular experience on the board of a not-for-profit. Do you want to start and tell us about your current experience and where you see things going?
Sure. I think not-for-profit, it's probably not really appreciated in Australia. I mean, as a segment, it's probably on par with construction and retail in terms of what it represents to GDP and number of employees. I think not-for-profit's about 8% of GDP, employs somewhere between 1 and 2 million people. There's another 2 to 3 million volunteers every year. That's not captured in that GDP or that employment figure. So it's quite a sizable market segment. The industry is experiencing some difficulties, and principally, you have to remember not-for-profits are generally funded in a couple of ways. Government funding is principally number one. Donors, and we're talking about corporate, philanthropic, trusts, donors, and then public giving. So if governments are experiencing tight monetary conditions, the ability to grow your revenue through government funding is going to be limited, and that's going to be the challenge going forward.
Because it's not for profit doesn't mean that they're not trying to obviously run a business and support the community and the people that they help. So I think that that's probably where it needs to have that support and guidance from primarily from the government in the first instance, but then obviously us coming in and being probably just an advisor for them to give them some more commercial financial advice about how they can better support the community and potentially like broaden their reach a little bit more.
It's, I think, firstly, a terrible name, not-for-profit, because you'll still need to trade in a cash surplus or revenue surplus position. So fundamentally, that's still bread and butter for every organisation. Aged care in particular, it's such an interesting industry because it's a lot about care. It's a lot about looking after vulnerable people, family members who are loved and appreciated, and their relatives and their loved ones want to make sure they're getting the best service of care. And as you mentioned, we've had the Royal Commission where horrible things came out of that. And the industry is now in a position where it's implementing better care policies, better care minutes, more care minutes, better attention for residents. And I think principally residential aged care has a lot of structural change happening, a lot of operational change. And less than 50% of residential aged care facilities in Australia are profitable. And I would think that's a very concerning statistic.
So pivoting a bit to, I guess, the for-profit side of healthcare, pharma, private hospitals, there's been a bit happening there. Any recent experience, Beck? I know you've done some recent pharmaceutical-related pharmaceutical up in Queensland.
It's probably a sector that I think off the back of COVID has probably thrived a little bit more, obviously, because everyone wants to stay healthy and buy vitamins and make sure that the medications are up to date and all that sort of stuff. But I think it's probably a sector equally from security review perspective, from potential enforcement. There might be a bit of a shift there in the coming years.
So a lot of pharmacies have gone into non-traditional areas of service. So they're doing business products where they get consumers registering for weekly, monthly cosmetic medications or cosmetic products. You see some of the branded pharmacies having developed bespoke weight loss regimes. So they seem to be diversifying into more of a service, non-traditional healing type of retail outlet. And I think that's probably helped them prevent I guess, financial pressures.
From private hospital space, Chris, do you have any experiences that you've?
Yeah, I mean, the private hospital sector is interesting. A big sector in Australia. The numbers are something like 40% of hospital admissions are to private hospitals. 70% of procedures, of elective procedures, are in private hospitals. So, it's a big part of the market. Been a whole bunch of private hospitals that have struggled over the past couple of years. They've faced similar things: increasing wage costs, stable or decreasing costs or revenues. The government rebates. You would have seen the big, the dispute, I guess, that's been resolved between Healthscope and Bupa. Government's made some changes around some of the services that will be included as part of the private health covers for individuals. But they're interesting businesses where there's been a bit of pain, and I think that's going to continue. We were recently appointed voluntary administrators of a private hospital down in Melbourne, actually, and that was an interesting story in that had been trading for about 18 months. They just didn't have the funding to continue. They were loss making, and a lot of those businesses take around 5 years to attract doctors to get to a level of starting to generate a profit. So that's a startup business, but even the established private hospitals have been having difficulties over the past few years. From an enforcement perspective, similar to the aged care, the level of potential obligations and exposure for directors is high. The company that we were appointed to, or the hospital, they had some mental health patients that were in that hospital over for extended treatment, and you can't just switch that off. And so if you're unfunded, similar with aged care, residential facilities, there's a level of immediate risk and activity that needs to happen to make sure that you're properly looking after those patients. Where are surgeries? Can they continue? Can they be pushed off to alternative hospitals? Important sort of risky appointments.
Yeah, it's an interesting point that you make, because obviously you just can't stop trading because that's providing care to patients, and so therefore it's how you get through that initial stage to be able to obviously ensure that if that does need to be some cost reductions, that it's done in an understanding way for more of the rural communities, and that would have otherwise probably relied on that hospital or facility.
I mean, luckily hospitals are good at this, about moving patients elsewhere for procedures, but elective surgeries, a lot of the surgeries in this particular hospital were IVF transfers. There were people that had been booked in, people that know that process. There's a number of weeks of injections and things like that, so you can't just, well, you can, but it would have been quite disruptive for those individuals to turn that off. So those surgeries were able to be relocated to other hospitals. The inpatient mental health patients, they couldn't be moved, and so there was a level of trying to figure out, okay, how do we continue that care for short term until there's a solution. But that were probably the big issues to deal with immediately.
What was the outcome of the appointment? Did it get sold? Did government step in at some point, or has it just disbanded?
No, so that was a large hospital facility, so owned by a large healthcare trust. $100 million hospital development operator had leased that site. That site has been, that hospital hasn't yet started reoperating. There's a receiver in there trying to run a process to get a new operator to come in. The footprint of that hospital probably needs to be changed. So that's sort of a work in progress. But on the government point, I mean, government sort of says they're not really in the world of putting in and injecting capital to save private hospitals. They don't generally do that, and so the industry sort of needs to find solutions. And I think over time there'll be some continued change and probably restructuring of those hospitals, and some will exit the market.
You talk about pressures. I did a restructure of a rural health network, and one of the big challenges was trying to find medical professionals, and we were very much reliant on skilled migration and specialised visas to fill those health professional roles, because we just could not attract staff in a rural regional location. Is that the type of sort of cost pressures that you're seeing in metropolitan and suburban private hospitals?
I think even in the metro, there is just an initial period for a new private hospital in particular about trying to attract doctors to new hospitals. There's particularly specialist doctors. There's generally a limited supply of them, and so if it's not in an area that particular doctors want to work in, so whether that's rural or a particular metro area, that's just another challenge that these hospitals are needing to try to find a solution for, and it can take time to get both a doctor there, but then for that doctor to build up a practice in that particular area. So Beck, what do you think FY26 and onwards the future looks like for the sector?
I think probably from my personal experiences in the pharmaceutical industry space, there's definitely going to be a lot of, I suppose, blowback in the market off the back of the Chemist Warehouse Sigma merger. I think probably there's going to be a bigger focus on not just providing, I suppose, over-the-counter prescription medications to customers, but also the broad breadth of services. But then equally to that, there's these ongoing cash flow constraints that are there to be able to continue with the ongoing funding of each of those pharmacies, and especially for the pharmacy groups that have a larger franchise, that's probably a bigger struggle.
I think generally this sector is going to have a more challenging 18 months. I think you'll see consolidation, particularly in the residential aged care sector, and whether that's through formal appointments and through advisors like Wexted facilitating that, I think that's probably more likely to be seen. And I think more at the grassroots arts, community, social level, I think boards, directors will be more of the realisation that they need advisors like Wexted to help guide them through those challenging scenarios. And whether it can be advisory, safe harbour role, or ultimately a formal appointment, I think there will be an increased incidence over the next 18 months.